Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we're back with another episode of the Real Estate Investing Club. Today we have Taylor Loht with us. And Taylor, I apologize. I forgot to ask about the pronunciation of your last name. Did I get it right?
You got it right.
Loht. All right, perfect. Taylor is here with us from NT Capital Group. They are investors. And he's here to talk about syndications, which is on a lot of people's mind, especially being a passive investor in syndication. So I am super excited to have him here. Taylor, thanks very much for showing up.
Hey, thank you for having me. It's a great pleasure and honor to speak with you today and your audience.
All right. I told you before we got on here, we like to start with stories. So why don't you take us back to the beginning? How'd you get started in real estate in the first place?
Sure. Yeah, absolutely. So right after I graduated from college and had a big boy job and a couple nickels to rub together, I was looking for a way to turn those nickels into, quarters, turn them into more money. So the first thing I did investing related, I was a pretty frugal guy, so I had money left over to invest. I just didn't know how to grow it. I read The Intelligent Investor by Benjamin Graham, which is about publicly traded securities, those kinds of things, and became a value investor on Wall Street. And just so happened by dint of my age and when I started working, happened to time the market awesomely because it was in the wake of the Great Recession. Did pretty well in that, it was appreciating, but I was doing the math on where I'm going to be in down the road. The math just didn't check out. Plus they weren't producing cash flow, right? It wasn't providing me any benefit until I turned 65, which to me is too long down the road. So after years of reading and researching and trying to find the best track, the thing that really tipped me over into real estate investing was I took the purple pill. I read Rich Dad Poor Dad like so many other real estate investors did, but that was the one that finally tipped me over. I'd been listening to real estate investing podcasts. I'd read a couple of real estate investing books, but for some reason, it's something about Rich Dad Poor Dad. He just really explains the benefit of cash flow and owning a business better than anybody else. It's, still to this day.
Yep.
So, decided I want to be a real estate investor. Took a few years to figure out my track there. And when I learned about real estate syndication, it really spoke to me more than any other real estate investing strategy. So that was just what I wanted to do because I wanted to invest. I wanted to invest in big things and do big deals, frankly, because it was exciting. Now, investing shouldn't be exciting, but just the process and just maybe the vanity aspect of owning big assets is exciting. But started as a passive investor with the track of becoming active in the syndication space, and years and probably thousands of hours of work, go by, and here we are scaling the business and doing bigger things.
I love it, man. And you're totally right. I don't know how many people have come on the show and said Rich Dad Poor Dad kind of got their start, but that is it's so true, and it's a really good book. It doesn't have a lot of tactical information on what to do, but just the framework is he nailed it there. So it does get you started for sure. And I like what you're talking about with, you were investing in Wall Street. I totally understand about the, investing in stocks is great, but it just doesn't have cash flow. And that's what I love about real estate is you have the cash flow. You see it every single month. You don't have to wait until you're 65 to actually, see the benefit of these investments. So got you there. Syndications, that's kind of your guys' bread and butter. And so I'm really excited to dive into that. You mentioned when you first got started, you were a passive investor in syndications. And so if you were, people out there, they've heard the term syndication. I'm sure they're, thinking about getting into real estate and they want to know how do you get down the path of syndications? Because that really does open the doors to the bigger, $10 million plus deals. So what is your advice to someone who's just getting started out and they want to get involved with syndications?
Read and learn about how the business works. Get on forums like Bigger Pockets. There's so much just free content on Bigger Pockets, and it's not all great, right? You have to eventually learn how to discern between the good and bad stuff, but you can get out there and watch on YouTube. There are several syndication securities attorneys on there who provide again, free content. Mauricio Raul's a great one. Provides free content about how that business works. Now, he focuses on the securities aspect of that business, which is definitely very important and a huge part of how the business works. But, the securities is one aspect, and the actual, business that we invest in when we buy real estate is another aspect. And when you get into syndication, one of the things I really love about it is that you can invest in almost anything. I mean, the sky's the limit. Basically, now you probably can't buy the sky. But for myself, I invest in multifamily and self-storage properties. May have some other asset classes coming down the road here soon, but so far multifamily and self-storage. But I know people in the syndication space who invest in golf courses. Private jets
fun.
is one of the things I've heard. I've heard people syndicated race horses, which is kind of an odd one. I wouldn't get involved with that. Okay. But it's really, I had somebody advise me recently that we in the syndication space should go away from using the term syndication because it makes it all sound more complicated than it really is. When you get in, the devil's in the details, right? But it's a big word that is ultimately describing a fairly straightforward
simple process
concept.
Yeah. And that is a perfect segue to my next question, which is, what is the process of syndication? How does it differ from, like a JV deal? I just did a deal with a single capital partner. He brought in all the cash and I ran the deal. So how does the syndication differ from, a regular JV partnership structure, or just, a regular investor going out and buying something, raising the capital himself?
Sure. So the government, the SEC in particular, gives us rules and regulations around what constitutes security, basically, when we're raising capital. And I recommend you guys go look that up. I'm not going to go through it here because I'm not a securities attorney, even though I do have securities licenses. You can look this up elsewhere. But the government tells us what is and what is not a security, and also what we need to do if we plan to sell those securities to others, to passive investors. And there are several ways you can do that. Basically, at a high level, securities will fall under registered and non-registered securities. Registered are the ones that you can go buy on Wall Street and public markets and all those kinds of things. But we can sell securities privately by qualifying for exemptions. And there are many exemptions, but the one that is going to be focused on, two that are going to be focused on primarily in the real estate syndication space, are Reg D rules 506B and 506C. Now, those have specific requirements that we have to fulfill, but 506B, non-publicly advertised deals, we have to have pre-existing substantive relationships with the investors. You can raise capital from an unlimited number of accredited investors and a limited number up to 35 non-accredited sophisticated investors. 506C deals, you can advertise publicly, but you're limited to accredited investors. So our deals and our processes have to fall in line with those requirements, and securities attorneys can help you with that. So it's really just remaining compliant with the securities laws out there so that we can do private securities transactions, pursuant to securities laws.
Yeah.
Essentially. And
if we're talking about just hard actions, the real change to the process is, one, you engage a lawyer to, draw up the documentation. And then two, you kind of broaden your marketing in terms of who you're raising capital from. Correct?
Yeah, I would say so. Yeah. And there are more detailed requirements in there about the different disclosures that are required between 506B and 506C deals, and the amount of verification that sponsors have to do of
like send in
status.
Yep, that makes sense.
You don't have to verify accredited status for 506B deals, but for 506C, you do have to get third-party verification of investors' accredited status, and that's pretty well streamlined at this point. There are so many third-party services that can provide that, or investors can often get that a letter to that effect from their CPA. So that's not a complicated thing. It's just an extra thing that sponsors have to do.
Yep. So that is setting up your own syndication and running deals that way. How about for people who want to just be a passive investor? What does it look like for them?
Yeah, so it's a very different process, right? But I think the first thing to do is to understand the asset classes that you want to invest in. So if you want to invest in multifamily or self-storage, get out there and study how those asset classes work so that you have a better, more informed knowledge base when you go and actually look at a deal that a sponsor presents to you. And then you want to build up deal flow. You want to go find sponsors and get on their investor list and build deal flow so that you can look at the deals and evaluate them. And as you're building that list of sponsors to provide you deals to review, you of course want to evaluate the sponsors themselves. I always say, look for people who have experience in the business. Now, it's always important to you provide the caveat that past performance is not indicative of future results, of course. But if we're going to go get surgery, I don't want the guy who's never done this particular surgery before. I want somebody who's done this thousands of times and has a track record in whatever kind of surgery you might need. That's the analogy that I use, and I think that makes sense when we're investing our money. Yep. So at a high level, those are the first things you want to do is really just get your feet under you. I think too many passive investors get into it too fast. They don't know what they're looking at. They don't take time to evaluate the deals, to really understand what makes a good deal versus a bad deal, a good operator versus a bad operator, and all those kinds of things. So build up deal flow, evaluate the sponsors, and I think eventually you'll start to really understand what you're looking at as long as you're studying and evaluating deals and sponsors.
Yep. And I would definitely second that. And I mean that if you want to be a passive investor or buy your own deal, it's all about volume and just getting your eyes on as many deals as you can. If you're stepping into a new asset class, even it just is amazing how much it starts to click after you see enough deals. I just started getting into self-storage, and we'll talk about that next because I know that's what you guys do too. But I got into it, a year ago, and I didn't buy my first deal for 6 months. But I was doing, 5 offers a week. And after seeing that many self-storage facilities, it just all started to click, and it all kind of congeals into a mass of knowledge in your brain. And so you really start to understand how it all works. So I like that you said that is just, get out there, start looking at deals, get on people's lists, understanding how it works. Which I'm going to use that as an opportunity to go into self-storage. I love that you guys do that. That's what I do too. And so where are you guys at, and what's your favorite markets right now for self-storage?
So generally speaking, I invest in the Sun Belt. I like markets that have, strong and growing populations, and we want to invest in areas that don't have an oversupply of self-storage, because that's one of the unique downsides of self-storage is it's so easy to build. It's also easy to get oversupplied. Certain major metros, especially, in particular areas when you really get into them, like here where I live in Richmond, Virginia, there's some areas that are definitely oversupplied in self-storage, and I wouldn't want to be an investor in that particular, local submarket radius. So I think there's so much population growth in the Southeast, in the Carolinas in particular, but also in Florida, that we're just seeing an incredible amount of demand for self-storage.
Yep. I've heard so many investors are trying to get into the Southeast. Specifically, like it seems like Georgia is pretty hot right now. Yeah. Georgia, Florida, all those areas down there.
No pun intended.
That's right. It actually probably is pretty hot right now. It's July 29th. Awesome. So you guys, you're in the Sun Belt. You love self-storage. Great to hear. What is your guys' criteria when you're looking at self-storage? What are you, do you guys only do certain square feet? Do you do, climate control? Does that even matter to you? What's your biggest criteria there?
I like larger properties with self-storage in particular. Once you have a certain amount of scale, that just, provides better benefits, particularly with self-storage. It scales very well. So there are a lot of benefits to going with bigger properties. Sorry, one of the cats jumped up on my desk here. So I like larger properties. I'm not that concerned about climate controlled properties versus non-climate controlled. I think it really depends. I think that is a great way to potentially get more revenue, but if it's not necessary, it's possible to offer just too much and spend too much money. I'm a big fan. One of the one of my favorite things about self-storage is, I mentioned the downside before of how easy it is to add square footage, and that's true. But that is also one of the benefits is if we purchase a property that has room on the lot to add more square footage, then that can be a great way to add value. So I'm a big fan of deals that have that opportunity to add more square footage where there's also demand in the market for that additional square footage. And folks talk about this all the time in self-storage, but it's still a largely mom and pop driven industry compared to other real estate investment asset classes, that I think there's just so much opportunity to add. I kind of hate to use this term, but I can't think of anything better to add more sophisticated levels of management, like more automated management, revenue management, getting people on, all the same market rent and everything. Mom and pops generally are not as good at that or as concerned at that. They're more concerned with remaining 100% occupied. And that's your prerogative. If they're 100% occupied and they're collecting enough for them, then, that's their business. But our goal is to maximize the value of the properties when we own them. And one of the ways we do that is bringing rents up to market and making sure everybody's paying on time and we're collecting and, all that.
Yep. I think every single self-storage deal that I've done so far, rents have been under market. People don't raise rents, or mom and pops generally don't raise rents, which is,
people paying cash. They're not taking credit cards.
We cut cash completely off once we buy them. We don't even allow cash. And that is one of my favorite things about self-storage is it's so damn easy to run out of state. It's very labor light. You don't need a lot of, hands on the ground every single day. It's a lot easier than a lot of, I own mobile home parks too. And those are a lot more difficult when it comes to management and operations.
Yeah, self-storage, hire a guy to walk through and clean up the garbage, take out the trash, pay him really well, get him to cut the grass, but he's still only there a couple hours a month. I mean, it's great.
Yeah, don't need much more. You were talking about oversupply. That is a big concern in a lot of markets, especially I feel like Texas. So I own 3 in Texas, and every market down there has 1,000 self-storage units. Do you guys have a per capita square foot that you guys use when you're looking at a market?
I've kind of vacillated on that because that is one of the things that people talk about as a target per capita square foot. And there are national averages out there, but all of the reading that I've done and from personal observation, I think the individual markets and submarkets can vary so widely that an average square foot is not the best metric to use. I prefer to look at occupancy. I mean, call around and secret shop these places is not that hard. You can see whether your competition within, a 10 or 15 minute drive is occupied or, what they're doing. I think that's better data to use than, square foot per capita, because I've seen, and also I've read studies about how markets can kind of be all over the place in square foot per capita. So I think it's too high level of a metric to really use, and that can keep you out of deals, but it can in theory get you into the wrong deal if you're not looking at the exact best data that you can use, which in my opinion is just straight up occupancy, how your competitor's doing.
Yep. And it's really easy to, especially if you're building, it's really easy to completely destroy that number. I mean, if you're looking at a 3 per capita square foot, but there's only 10,000 square feet in the market and you're trying to build 100,000 square feet, that's, you automatically just destroyed it. And so I agree with you there. Is there a market is there a metric that you guys like? I mean, you're talking about occupancy. I think that's a great one. Is there anything else, any specific metric that you guys like to look at?
See if I can think of any other ones. I mean, when it comes down to it, I don't want to say any particular, deal related numbers, but it's all about the individual deal. Like if there's so much demand in the market, but, and we're looking at a property that doesn't have potential upside, then great, there's demand in the market, but I can't capitalize on it with, X deal that I might be looking at. And that applies to multifamily too, is, I don't just want to be in a market with high demand. I need to be able to capture some of that demand. So ultimately, it really comes down to, can this deal take advantage of any demand that we see, unfulfilled demand that we see? And some deals can, right? If we want to try to expand and there's no remaining space on the lot, then, and you can't buy a lot next door or, whatever, then, maybe look for another deal in that market or something. But it's all, at the end of the day, it all comes down to the individual property you're investing in and whether it can capture the opportunity.
Yep. I like that. I heard a quote yesterday. Somebody said, if you have to do, what was it? If you have to do too much math, then it's probably not a deal. And I thought that was a good quote. All right. I just took a peek at the clock. It does look like we've gone through our time, so I have to push us into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, one for general life wisdom and one for real estate specific.
Sure. So say one of my favorite books, I'm not going to say Rich Dad Poor Dad, but the E-Myth made a huge difference to me, just in being able to scale and, kind of step out of some of these aspects of my investing business. It's made a huge difference. And then can I go with a fiction book for the other one?
Go for it.
I'm a huge Lord of the Rings guy. I love it. Rings.
You must be getting excited for September then, right?
Honestly, I'm not. I think they're not gonna. I think the odds that they're not gonna respect this is a very fraught issue. I think the odds that they're not gonna respect established canon are very high. They've already said that they're shortening timelines. Several of these events are in the Tolkien original, the actual canon, are several thousands of years, but they're compressing that timeline because they don't want to recast men. That doesn't work for me. That's already trouble. Man. I'll watch it, but they can't change the canon, right?
Yeah.
So either way, they can't screw up the original work.
Yeah. That is for people who really like Lord of the Rings, that seems to be a very contentious issue that Amazon's making this new series. So I'm excited for it.
I'm not telling anybody else they can't like it. If you like it, great.
Yep.
I'll watch it.
Cool. Well, great recommendation. I still haven't read those books. They're just so big. They're a little daunting to me. So maybe I'll pick them up one of these days. And Michael Gerber, the E-Myth Mastery. That's a good recommendation. So next question. This is for your younger self. If you could go back to the Taylor who had no experience in real estate, he was still, in Wall Street, looking at those value-added investments out there. Go back to him, look him in the eye, give him one piece of advice moving forward.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
One piece of advice that's difficult. Commit harder. The more you commit, I'm not saying bet it on black. The more you bet on yourself, the more you invest in your own business. I think if you do it right, it can really pay off. And that's a lesson that took me a while to learn and implement. But the most successful people I know, and this is probably the case for you as well, they go for it. And I'm going to harken back to something you said, and this is supposed to be a short answer, but you said earlier you got into self-storage investing, I think about a year ago. And for the first 6 months, you were just getting started. But your definition of getting started is not the same, clearly, as the definition of somebody who's kind of struggling in the business is. And I'll dig into that a little further. You said you were making 5 offers a week, I think is what your number was. You're making 5 offers a week. That is a proactive getting started where you're going to eventually, you keep doing that, you're going to get something. Right. Yep. But a lot of people say I'm getting started because I'm looking at deals on LoopNet. I'm not making offers. Well, that's completely different, right? And that you committed.
Yep. No, I like that that advice, and it took me a long time to learn that. When I first really got started in real estate, I was doing that same thing. I was just looking at houses on the market. Every once in a while I'd reach out, but being able to commit and fully focus on one thing. And I feel like focusing on one thing is also a really important aspect, because before I really focused on real estate, I started, I don't know how many businesses, and there's always a shiny object out there, guys. So just pick one thing and focus on it, and you'll see a lot more respect.
That's important.
Yep, absolutely. And that moves us. I'm going to move us on. Next question. This is for the United States. It's a big place. A lot of opportunity out there. A lot of square miles. You've already answered this generally, but I want a little bit more specific of an answer. Give me one MSA that you're most excited about investing in today.
That is an interesting question. One MSA. I like Phoenix a lot.
Really? Phoenix. Interesting. Okay. Yeah. That is, there's a lot of growth right there, but it's interesting that you say that, because I've never invested in Phoenix, but I've heard that the volatility in Phoenix is pretty high.
That is true. I think Phoenix was pretty hammered pretty hard in the Great Recession. The Phoenix real estate values got hit pretty hard in the Great Recession. Our Great Recession was its own thing, right? There was the dip in real estate, but really the collapse of the near collapse of the global financial system wasn't driven by the real estate itself. That came from Wall Street securitizing and basically committing fraud at every turn, right? Yeah. The ratings agencies, we've all seen The Big Short. I recommend, checking out.
I just watched that recently. That was a great movie.
Great movie. I rewatch that movie all the time. It's awesome. Well acted. I love all the actors in it. It's great. It's really great. But I think it has strong fundamentals. There are a lot of people moving there from California. I think they're really managing the climate risk of that city well. I mean, it's super hot there, and they have water risk, but they seem to understand that and be making moves in that direction. Some areas are not doing the same, and I'll point everybody who's aware of the climate risk and paying attention to it. I think Neil Bawa out there has put out some of the best content on evaluating climate risk, but also being able to evaluate if local governments are taking it seriously and understanding what's coming or not, and they're just not moving forward with it and not paying attention. So I think that's important.
You said that was Neil
Bawa.
Neil Bawa. All right.
BAWA.
All right. Good reference there. Moving on. This is for your strengths. We are all gifted with something that we specifically can give this world that is our Superman strength. So what are you exceptional at? What's your strength?
So some might say persistence, but the spin that I put on it is stubbornness. Persistence, I think, is stubbornness is maybe a little more pejorative, but like when I have my eye on a goal, I'm just going to keep moving forward on it. Maybe at least in the beginning, I may not have committed hard enough to move as quickly as I wanted, but I understand that now. Still have the same goal, and I'm just persistently moving forward toward it.
Persistently taking the cat off of the
yeah, that's right. She's gonna jump, but she's persistent too. She's gonna jump back up here, but it's all right.
I love it. All right, moving on. This is the second to last question, and this is for tools. Tools run our businesses. So what is one software tool or any other tool that you use every single day that is the foundation to run your business?
Active Campaign, huge tool. Ooh, see, she's trouble right here. She unplugged my headphones. Hang on a second.
All right, technical difficulties one more time.
We love the cats, but like I said, they're trouble. You still there? All right.
Yep, we're here.
Okay, so restart my answer. Active Campaign. Active Campaign is one of the best tools that I've had in my business. It's a little pricey, but it's got very powerful automation. So if somebody comes to me through my website, they fill out a form. Active Campaign handles all that back end till they're, the person's reminded to book an appointment with me or whatever. Send out our emails that way. If I have a conversation with someone, I'm going to take notes in Active Campaign, and I can go back and refer to those notes, almost years later, depending on when that happens. And yeah, that's a great tool.
Perfect. Active Campaign, and that's a CRM system?
Yeah, CRM, marketing, and automation. The really strong point of Active Campaign is the automations. The CRM itself is a little weak, but you can do a lot with the automations in Active Campaign once you kind of learn how to use them and how to build more powerful automations and use the tagging and integrations and everything. But there's a lot there, and it's not cheap, but it's also not the most expensive option. So I'd recommend it.
Yeah, I was just looking at the website here. It looks like a good platform. All right, Active Campaign. That leads us to the very last question, and this one's for the listeners. You've given us a lot of good advice. I'm sure more people want to reach out, learn a little bit more about your syndications, about starting a syndication themselves, whatever it is. So what is the best way for somebody to reach out and get in contact with you?
Sure. So I have a podcast that you were on, you're aware of, the Passive Wealth Strategy Show. You can check that out. I have a free 7-day video course about red flags in passive real estate investing. Now, I'll warn you, it's not everything that could possibly go wrong in a real estate deal, because that would be huge. That's impossible. But these are the top 7 things that I've seen go wrong in real estate deals over time. Try to make that really accessible. That's at passiverealestatecourse.com. Those emails come from us. So if you want to get in touch with me, you can reply to those. There's also investwithtaylor.com if you'd like to actually schedule a call with me, and look forward to speaking with your listeners. I think I'm sure you know, and your listeners probably know, that your network in real estate is like everything. I mean, that's the majority of your business, is who you know, how strong your relationships are with them, and how much value you can add to them. So I'm happy to have a conversation with any of your listeners. If I can help you out, happy to do it.
Perfect. That is passivewealthstrategies.com. I will put that in the show notes.
Passivewealthstrategy.com.
I will put that in the show notes. So if you guys want to reach out, go ahead and click a little more in the description. It'll pull down the full description, and in there you can find the URL. And I apologize, even the title of the episode that you had put was Red Flags for Syndication, and we didn't even touch on that. We totally got sidetracked, but maybe we'll save that for our next one, or you guys can reach out to Taylor himself and figure out what those red flags are. So Taylor, that wraps it up. Thank you very much for hopping on. It's been a pleasure.
Thanks for having me. Great to talk with you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your business to the next level, I've created an ebook just for you, available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to
to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.